Good evening, friends. The recent budget has a very limited amendments in the indirect tax. One of the most important amendment in the indirect tax of the recent budget is the change in the place of provision of service in respect of intermediary services. What is the change and how it impacts the business at large is something which we will discuss today in this Gyanshorts of the Chamber of Tax Consultants in Centenary Year Initiative, whereby me, Vikram Mehta, will explain these amendments with respect to change in place of services, place of provision of services in respect of intermediaries. Now, what is intermediary? Intermediary has been defined under Section 2, subsection 13 of the IGST Act to mean any person who facilitates or arranges supply of goods or services or securities or both between two or more persons. It may be named as agent, broker, or by any other name. However, the same will not be covered if the supply is made on his own account. Now let us understand this definition by way of an example. A company in Germany engages an Indian entity to market its goods or services. Indian entity markets its goods or services, and for that it earns commission. This commission which it gets is by rendering of intermediary services. This commission which it receives in convertible foreign exchange from a foreign entity is subjected to tax as per the current provisions of GST before the amendment. Because the place of provision of intermediary services was covered under Section 13(8) of the IGST Act to be the place of provider of services or supplier of services. In the above example, because the Indian entity is in India and it is place of provision of is also in India, the place of supply is in India, therefore GST was liable to be paid. What the government has done in the budget is the place of provision of supply for an intermediary has been removed from 13(8). Thereby, now as per the amended provisions of place of supply, in case of intermediary services, the place of provision of service is the recipient of services and not the provider of services. And therefore, with this amendment, the Indian entity who earned convertible foreign exchange from a foreign entity will be able to claim it as not taxable, being an export. However, the result of this amendment, the contrary will become taxable. Let us understand this contrary with an example. There is an Indian entity who engages a person in, let's say, South Africa, and he markets, the South African entity markets the goods and services of India over there. The commission is paid by the Indian entity to that foreigner. This commission, which is paid after the amendment, will become liable to be paid under GST because it will be taxable under reverse charge mechanism, and the payment made will be treated as import of service because the recipient of this service is in India, the Indian entity. Therefore, this amendment on one part allows the exporter to claim the benefit of not paying taxes, and on the contrary, makes the importer liable to pay tax under reverse charge mechanism. Trust this information will be of importance to you. Thank you very much.